All right, Sunday, June 4, 2017. Start off with copper, and then also unleaded gas here real quick for the charts that I sent you out this morning. The deal is the part of that Wall Street has a copper roof. Well, if you go back and look at, here's just the price of copper, okay? Copper, in my eyes, has more to do with the price of the U.S. dollar as a commodity, okay? Here you have a period where we had our first whiff of inflation and cornering of the soybean market, things of that nature in 73, 74. The Hunt brothers played the bean market after 73. The weather changed and Russia came in and bought a lot of our soybeans. Okay. 1980, we had the peak. Here's $1.50. We had the peak of a commodity cycle. Okay. And then we went into the equity run here. In 1987, we had the peak in housing. Okay, but we had 2 more years of run on here. All right, and then Gulf War I, recession, and commodity prices came down all through the 90s. 1987 was the housing peak, and 2005 was the next housing peak. Where are we here? Right at December of 2005. Just in here? Yes, so right here. This area here was the second peak of housing. Okay, so now I'm just a quick eyeball of it here. All right, I talked about the 1985, 1987 move in gold. Okay, here is 87 to 89.90. So this is 3 years after where are we at? 3 years, 1, 2, 3. So this would be 3 years. Okay, see how it has this, a shallow pullback. Now this is a quarterly charts here, shallow pullback, and then it poked and barely made a new high. So here's where we're at here. Now, if I take this drop into here, okay, and this drop also, then the next swing would be higher, got close enough. This one fell a few pennies short. This one actually came through. So now we have a dip, bounce up in here. We're coming down, and then we get a small bounce here, okay, and a bunch of this. But what I'm getting at is we're looking at years here, and the bias is basically down off the highs. So here's the highs, bias is off the highs. Now, I'm not saying that this is going to roll over and collapse, but what I'm looking for is when it does happen, like we had a pullback. Here's where we had British pound unwinding. The Saudi Arabians came in and flooded the market to force people out of it. This is 6 years after the peak in oil. All right, so 6 years of the peak of oil would be 2017 or so, right? I mean, just taking years in effect. The Saudis said we've had enough of this. Okay, and then we had a run. Copper took off and ran, basically similar to the same thing. How we had copper go sideways, but on a shorter pattern, and then took off running. What I'm looking for is, I think as we march forward, we do have one move in commodities in general. So as a asset class that they come in and they just buy, indiscriminately buy everything as long as it's pointing forward. I'm still having a tough time. Think about this one. You're Warren Buffett, right? What's that? Almost 70 years of doing this. I think he got a $500,000 loan from his uncle to buy Berkshire shirts and stuff. Okay, so this is how he was. He's buying a shirt company. White shirts. Got to buy white shirts. Now look at us. I had somebody ask what business casual was, and I'm like, hold on, what? They were invited to a fundraising deal, and it was business casual. And she turns to me and goes, "What's that?" And I'm like, "Well, Miss Tattoos and Piercings. What that would be is, well." So that was it. But what I'm getting at is that all of a sudden you're at the end of your career type of thing. How do you have that much money? How do you not follow like 52-week highs? And just even, see, that's him as a fundamentalist. He looks at it a macro. Okay, so he says, he looks at the people that are bringing in the money. Your Coca-Cola, all of it. Coca-Cola's your banks, your rails. If 95% of goods goes by ship, you should have some sort of fingers in the shipping business. Buy slots on ships. Those kind of things. But he's not. Warren didn't catch you know, Google and stuff. Those you watch at the 52-week high, they're on there constantly, and it's a momentum thing. So here you have copper, okay. Copper breaks down as on a macro level. Okay, we're still in the upswing for real estate, but we had that back here too. We have it in the 60s now. Okay, and then 1987 was the peak, and so it's I'm looking for the late 60s. Okay, so this was so during this period where we had a housing boom in the United States. This is where the baby boomers. All right, we're coming into things here. All right. This is the early boomers in here buying into these, you know, 72, 73, 74 area. And then the late boomers came into here in the 80s with the real estate peak. In 2005, we had the boomers buying a second home, that kind of thing. All right. So all through this period of expansion, the copper prices remained low because that was the dollar. The dollar was high. The dollar under Reagan got up to 164. Okay, so all of this here is the dollar came down after basically 9/11. 9/11 took out, copper took off. So, but during this period here, now mind you, we're talking 60 cents to $1.50. Copper remained above the previous area. Okay, so it remains above the previous area. Copper here remains above the previous area. I would assume copper then would, it did slide into this one here, but it basically remained more than up half the area. I would assume that copper will probably come down in a low area here. It'd probably be $1.50 or so. If copper reacted like how this unwind was with oil, we would expect copper to be somewhere down in this area. But for me, in my eyes, copper is related more towards, not as much as the copper roof. Wall Street has a copper roof adage. It has more to do with the U.S. dollar, and then things of that nature. Wow, a lot of bodies up in here. But see, you have people here that don't remember. I mean, this is before copper took off. It was at 80 cents. You know, when I saw it at $4 a pound, I'm like, holy buckets. Even up in here, I'm like, let me put this into perspective of buying silver. You know, there was a period here, 90, in this period, I think Sumitomo Bank tried to corner the copper market, and it didn't work out. I'm sure it got 96 or something, finally got pinched, finally got a washout. You know, yeah, probably thought that this was going to be a 3-time Charlie hit breakout. It didn't happen. Well, whatever. You just get stuck in a bad trade and you keep adding to it until the money runs out. That's like Madoff and everybody else. You know, once everything's good on the way up, because you can implement the fraud on the way up, but when people want to get out, that's your problem. You know, I mean, you have some people who get out. Some people just hold on forever because they, you know, it's kind of like Bitcoin now. We're at 2,500 or something, 2,600. And you have people talking about 6,000. Oh, that's not what I was looking for. Where's the other B? There we go. So we have the Bitcoin here. So this is 10 days worth here. And this is a lot of sideways chop here. And we're just hitting the dots from when we came down here. Here's the dots. I wish I could just work a little better. Bang up, right up against the dot, 10 days. All right. So we're at 2,600. All right. Okay. So getting back on track here. Okay. So I have copper here. Let me go back down here and see. Okay, copper. So here I sent you guys a list of copper. Okay, here's copper. This is on a weekly basis. Okay, so it has the same kind of look as gold. Okay, so in my eyes, like I said, it's counter trend bounce. Okay, basically we have a weaker dollar here, right? So here's our copper. So basically, it looks like the lines here are working out. Here's pivot. Here's pivot again. It's holding pivot, coming back through 240. Then I'd look for it to probably go down to the, you know, like 180, 160 level. Because what will happen is once this once this you know, we go into recession or something, you're gonna have people who have purchased copper to send it back, kind of stuff, you know, and cancel orders and things of that nature, because everything's forward looking. People buy, you know, it's kind of like shipping. You don't ask for a ship today. You know, you have to, if you have something to move, you know, you're waiting, you know, a year, 2 or 3 before the ship's empty, because that's what they do. Is they sell stuff forward. When do you need it? When do you want it? So that what happens then is you start canceling contracts. So if we do, like I said, I'm looking for some sort of drought. You saw that copper actually moves later in the cycle here. Okay. For on this weekly chart, you can see here that when the copper was oversold off the bottom here in the unbalanced volume, we're doing it again. So we're basically cleaning out. So in my eyes, the swing is higher here. We also have, what do we have? We have interest rates that came off during the interest rates coming off with prices moving higher. Okay. So now you have an area where housing picks up again. Okay. And so just the perception of it all, you know, you know, homes are going to go up because of what was put into the house here at 210, 220 is now, you know, 30, 40% higher here. But I would, just how I would lean for right now, it's depending upon all on the dollar. Okay, here's 240. So this would be the line in the sand, because this is support down in here, bounced off of it and went to, you know, added 50 cents here, came down, muddled with it, fell through it. This is the same type of look that I'm looking, but it's going to be on a grander scale with this here. Okay, it's not just you know, pause, and then a hard slide. This is all of this. So this screws up everybody selling copper. For, you know, here's 2012, 2013, 2014, 2015, 2000, and then we're getting a bounce here in the buck. So depending upon the dollar, and we're at 97. I mean, you know, you put this in a ratio. Let's do that. US dollar. And we save it. So this is long copper, short dollar. It's not working out. Okay, right? So you want to, but we are getting a bottoming process here. Whoops, that's not right. You forgot the dollar sign. Or you did, but forgot it. Let's try this again. There we go. I thought something was wrong. I'm like, hold on a second, that doesn't make sense. And then looked up at it again. I'm like, that's all right. All right, so here we are with the dollar versus the dollar divided by copper on here. Just an RSI down here. So you actually had, this was a whole year of how that worked out. So this is buying. So this is buying. Did I say one? This is buying copper and selling the dollar. It's working. So copper is basically outperforming the U.S. dollar, but we're at another level again on the dollar. Let's see here. All right, so we're coming up to one. Here's 95, but we're talking. We've gone from we poked our head through here. I suppose, in theory, if you poke your head through here, came down, retested the basically the breakout area, didn't hold it, came back in. But see, a lot of the choppiness in here, I would expect. Support. The only thing I can think of is if we get more news. Okay, we're running out of time here. The deal is the Federal Reserve is on a policy, okay, of a pathway, excuse me, of moving this along, because it's all in timing. What happens is the humans go funky near the end, because everybody feels rich and they're spending it, the velocity of money picks up. It comes in and it goes out. It comes in and it goes out. And people, there's just the idea of saving is not there. Debt, that kind of thing. Especially when there's no difference now between using, you know, you used to use you used to have a bank book and then a passbook. I think it was called for banking. You used to have a passbook, and then you had a charge plate, which is a credit card. Now it's all one, so it just indiscriminately, you just go out and spend. All right, when you should be saving right now. 2 years, just start saving something. You know, round your paycheck to the nearest $20. I don't know, whatever, that kind of thing. Start saving. $20 a week over years is $1,000+ whatever. Pays a monthly mortgage. Is that right? Jeez. Well, that's not very good. All right, whatever. All right, so US dollar. Wow, you save for a whole year for a month's worth of stuff. Oh, that doesn't work out at all. Wow. So hold on a second. See, Arizona has their unemployment is, I think it's 240 a week. I'm putting into, you know how they talk about backstopping and, you know, like the put on the marketplace that, you know, the capitalism will come back in and support the markets. Well, here's another one for you quick. I've noticed over the years that we've had fewer and fewer issues out there in the stock market. So what happens then is that's scarcity amongst itself. And that would go along with what the chart looks like, where it's just very well extended after a long period of time. If I take what type of growth we had in the 80s to compare to growth today, it's not warranted on our issues here. You know what I'm saying? I mean, everybody bought a computer in the 1980s. It was a growth. And then in the 90s, we got the internet, right? So that we had some you could actually feel the growth. Now all of a sudden everybody's just buying a phone. You know what I mean? I mean, I'm at the stage where it's like, oh, you know, if what my pad could do to my laptop, because there's certain software and stuff they're being evil about it. Then the laptop, because I carry all four of them, but the first thing I reach for is one of my two pads. I set up both pads. You know, I can go to the library and set up, you know, dual. I got a 3-window system when I go to the library. You know, their computers are really fast. That's one thing I noticed, and which was interesting because they're on a different pipe. It came from Northern California, and I think ours locally comes. That's what it is, right? We have fiber optic in and fiber optic out, right? Well, if you take the 10, it's faster. If you take the 40, I'm in Lake Havasu, so that's you know, Interstate 10 and Interstate 40. You know, one to San Diego and the other to Phoenix, kind of thing. Blah. All right, so back to the dollar. Well, in theory, here it pokes through on the upper end and comes back down in the lower end here. I would not expect the dollar to come back down. Let's go back and take a look here. I'll have to go on a quarterly basis here too to take a look at where we were in the cycles. All right, so this was our inflationary period, and tightening the dollar took off because we had to raise interest rates, and this was follow through, right? We were at lowering interest rates. We had another recession here in '89, but we had to choke off the system, and this is the marketplace reacting to all of that. We came down. So where are we at with 86, 87? So we had a bottom in the dollar, and the commodities went up. So here's copper. So copper actually did bounce, but it also came down going into the Gulf War. Okay, so this is counter-cyclical. So this was our dollar. Here's 82 after the recession. And then in 2094, we actually started raising rates. The dollar came down to 80. We're at 97. So hold on a second. This is what I was looking at. One across the top. Okay, so one across the top. We actually did come down to the bottom. Well, you know, it's my eyes of going, what are the odds of hitting, you know, 80, 89, 90? Well, that would definitely set up the commodities thing. But we would have to raise interest rates, which would cause the dollar to go the other way to stave off the in. This was actually timed with the drought, with the CRB. All right, I need to save one of those. And, that's the last one, something to keep track of. Sure, why not? And the one before that, I think I already had. But we'll keep it anyway. So get our next set. All right, so weekly dollar and then CRB. All right, I need to go back to quarterly. All right, so this is the 60s. I talk about this every once in a while, that this was a period of the 60s. Okay, and then this is coming off of the gold standard. So so everything related to was with floating currencies. Okay, so this period was on the gold standard, so you can see how um, people would get pretty cheesy if everything was stagnant. Okay, actually wages were, began to get fixed somewhere around in here. Okay, wages have basically been stuck. So this is a commodity cycle. So this is, we came off the free float. So this is actually the dollar floating. Okay, this is the CRB. So here we have something 80. Here's the peak. We didn't get the trough again for 17 years. So here's the peak. So I wouldn't expect the trough to be actually for a period of time. Secular cycle to start up again. Now let's see here. Here's where we're at. Okay, this is when we started raising interest rates. All right. And we did swipe all the way under here, but we don't have oil down there because oil was at 40 up in here. So what do we have that's come off hard enough of all of this here? Because beans are still up. What my thinking is what happens if the CRB does come down? It has changed though. It was equal weighting before, and now it's kind of slanted. They took out a few things too, so it's not really pure. All right, I'll leave it at that. This did catch my attention when we hit down here. I'm like, hold on, why is the CRB below? But all the underline, I'll have to punch that up. I wonder if I can scan for what's in the index on this one. I need to save one of those. All right, so that's my copper, but let's go through the contracts and stuff real quick. Because somebody, like I said, somebody asked about copper, and I was like, well, the stock market can go up and copper can go down. It's not, it's more tied into dollar here. But 240, set alarms for 240 here, because that, for all I know, this thing just chopped sideways into the new happy period. It has an upper range here. Remember, these pivots and all that stuff is with the previous year. So, I mean, if the market didn't, if this was through the rest of the year, it didn't break out, the pivots would have been narrower. So that's why I use all the other pivots on here too. Like these kind of line up together. So this is overhead resistance here, and then I guess you could do point and figure too. Okay, so we have June copper. You can see the washout here. Bodies are going to be getting out of this stuff though. Okay, they're rolling out of it. Okay, so then we look up to July copper. The bodies are out of it. So I would have to lean that copper would probably go higher, but use support here. Just by looking at, if I eyeballed it and said, well, it wouldn't take much to push this thing higher. I'd have to check out the commitment of traders on there too. You can see the volume moving here too. August. That one show volume? No, August. Okay, bodies are moving in. So you have somewhat of a small bear flag on here. These are weekly, or excuse me, bull flag. So I need to look at August, September. Okay, you can see that over this month, we're talking since the beginning of the year, came down. I would have to say, and you saw how it pushed into the recession because there's a lag on there. Forward contracts get canceled. People, I need my copper till 2020. The building's already paid for. You still have to put it, build it. Okay. October, money's moving in. Big time money. This is October. Why didn't it move in before? I shouldn't say. There's the number of contracts. It's small, but you know what I'm saying. It shows. Here's December copper. Let's take a look at you on a daily basis. Weekly is oversold. All right, so the daily, the bodies are in there. So what do we have? The bodies are here, went up, came down, went up. That's not a good sign. And no, this says that the bodies are in there. 50%, the purple is RSI. It's just kind of hanging there in yellow. So this is kind of a split thing on here. That was a pretty good hammer. So 255, set an alarm on copper. Possibly a head and shoulders here on a daily. That is a pretty good run though. But this is all got to be all dollar related. Because I assume once we start taking out the lows here, we're just going to get a precipitous washout in commodities into recession. All right, so copper. No, these are. All right, so this is. I can print these off. I think I just sent the list of these. I can print all of these off on copper. What I'm going to do is save this one. What are you? Brass holdings. I guess we can rummage through here real quick. And then I need to do it this way while I'm at it. Oops, I'm going to do it now after looking at the futures. Get the cut. Well, they are listed. Oh, yeah, that's right. Sorted in that order. Very good, Kevin. All right, so now we're going to go through the copper miners. See, we're back to this game again. You play the gold or you play the miners. I would avoid. It's kind of like buy the underline and sell the miners. Oops, no, 10 on, yeah, 10 on there. Southern copper. Okay, so that does have that kind of look to it. These weekly, yes, okay. So somewhat of a bull flag, but it's taking forever. It was 13, sideways for a long period of time. And we're basically washed out. That's crazy. See, so this tells me actually that there's still enough for people to chase after this thing. So if this is what happened, if for whatever reason, we have a series of bombings in London. We had bombing in July 2005 in the L in London, but that was a few months before America topped in its real estate. We continue to persevere and move forward here. Okay, so what I'm getting at is if by chance we do something that warrants the Fed not to raise rates, things are gonna go batshit crazy, because what it'll be is all these people piled into June thinking that we're gonna raise rates, and if by happen chance we skip it, okay, even though we're on some sort of a plan. The 1930s, when we came out of the Great Depression, it took forever to get rates to get going. It took 40 years to get that cycle. Or 30 years. Well, 45, yeah, it's 82 or 80, we'll say. Or to raise rates. No, that's a longer cycle. Yeah, from the 30s to the 1980, 40 years. Yeah, 30, 40 years. Okay. All right. So if they do decide not to raise rates for whatever reason, because the marketplace is big, everything's ready to go that they should, right? Except for the marketplace, right? If they skip it, the dollar will probably fall apart. That's the time to go in and buy it. Some of these commodities will move up, and then that'll be that. Because I really think that a lot of this is just counter-cyclical or counter trend move. This is just a bounce in a bear market. Copper mining. I should print off these first 10 pages here. See a lot of these. See, like this one, we had this action going on and not much happening. You know what I'm saying? You can see, you'd see if you just had a trend line draw. Well, I guess you could say that this is a retest here. This one doesn't look copper mining Canadian. Buy copper, short cannabis. Cute, Kevin. Gabby. Well, there you go. Punch this one up. What do you have? Oh, what is it? CIB? What is it? CBIS. Cannabis. Is it a TO? Oh, you buggers. I think it's Canada Systems. Aurora Cannabis. Well, Canadian. So these are all the ones for cannabis. Pink sheets. What do we got? CW. CBIS. Oh, it's the CBIS just itself. Exploration production. Whatever. Telling you we're some sort of freaking miner. Nope. Well, it does kind of have, it does lean though, doesn't it? This is long. Copper Mountain is short cannabis science. Is this a weekly? All right. Daily. This is a bunch of sideways. That's quite the interesting deal. You guys can have a laugh at that. Yeah, it's right dead center. Buy copper, sell cannabis. I'll send that one out today. That'll be hilarious. Should actually keep that, you moron. Save as copper. View all. All right, so cannabis here. So the thing is this is because somebody said something about copper. So I looked into it a little bit further. That's the, gives me a path to go down, because I come here, everything looking generic. If something should pop up, then I get all excited about it. There's certain things I need to read, because I look at the larger macro cycle. Because the thing about it's like this: if you had like for me, I knew. Well, here's one for you. In 2011, when everyone was buying apps left and right, I had software that I paid $1,000 for, a drum machine I paid $1,000 for. And these apps, everyone priced their app at 99 cents. And I'm like, I went on a spending spree in 2011. Just everything I clicked, because I said, they're going to go no, now look at the apps. Now the apps are, there are apps over $100. Okay, now they're finding their supply demand type deal. So it's in the marketplace. Okay. Yeah. Apps. Where was I headed with this? Supply and demand, pricing, whatever. Okay. So the thing is that, I'm looking at the bigger picture. So whatever, you guys, send me to take a look at it or whatever, then I can give you a bigger picture on it. Because I had an opportunity of buying silver all through the 80s and 90s of that 315 ounce, 10-ounce bars every week. You've heard the stories before. And, if you get an opportunity of getting something like that, I know how tough it is for your life, but trust me on this one, all of a sudden you get to your 40s and 50s and all of a sudden you realize, wow, 10 years isn't that long. But then you realize you're in your 50s, 40s and 50s. You're like, wow, 10 years. But that's what the cycle is. It's a larger degree cycle. I'm looking at that whatever happens into the recession, these commodities are going to, think about this one. Once we're done with equities, however we do it, we're ending with chips and technology again. Okay. This one's kind of good. Copper Resources Bank. I'll print these off to you. This is done by volume. Copper Mountain. All right. I'm going to leave it at that. All right. And then I'll send this off for copper, because I wanted to kind of keep these short, and then I'll go into natural gas. Let's see here. Come on, you. Watching me fiddle around with my stuff. Why does this take so long? That's why I'm at the library. Because everything is getting doggy in the neighborhood. That's one more thing here. Commitment to traders. I have it on here. All right, so commitment to traders on here. All right, Euro long's highest climb 2011. Okay, so now I'm back to, well, now you have to look at towards fading the market here. So this is our dollar. The dollar index is 60% euro. So they're getting out of the dollar. Are we heading into recession? Not a clue, but that's the thing that, that's going to be the ultimate goal with all of this. But we're working on the frothiness. Where the stock market's going up, but it's not broad-based. We're getting a move in commodities inflation-wise, but that's dollar-related. So, depending upon what happens with the dollar here, or with raising rates with FOMC, if they do raise it, then in theory, the dollar should go up, because our rates are now higher than some across the world. All right. Okay, Canadian dollar over here. This is one that was extremely short on here. The red is the price on here. So you're getting the bounce in the Canadian dollar. But I wanted to run through these real quick here. Euro, see the euros are long. Okay, like here's the Japanese and they've gone from long to short. Okay, British pound, they're still short. Here's the euro. Okay, they're long. Okay, what am I looking for? British pound, Swiss franc. This is interesting. They're going short, but prices are going higher. Okay, so there's a problem over there. That gets my attention. And they usually go hand in hand. You see that the fewer longs, price comes down, right? This is just ultimate supply and demand. But sometimes you get, like here, price is stalling on the Mexican peso, and you have all these. I wouldn't be surprised if the Mexican peso came back down. Now that would go along with, say, like silver and stuff. So the Mexican peso now is going the other way. Okay, this is the number of pesos per dollar. So that would be weaker, right? Yes. So the Mexican peso gets weaker. I would have to say that would be economically, right? Because the other way would be if the Mexican peso gets stronger, that would go along with silver. But we're back to the treating the white metals as industrial, copper, throw that one in there, and then gold's on its own for more monetary than commodity driven. Okay, here's gold. You can see that there's not much going on in gold, so if they decide to go higher, they're going to have to chase after it. Here's natural gas. This is my lead into the next one. Okay, then you also have 10 years that they've been net long this stuff. So the marketplace actually went from net short to long on here. Okay. S&Ps, you can see the longs. We also have rollover on here too, but this is just over. If you get out of June and you get into September, it's going to be fluid, right? So here you have where they were net short, prices continued higher, on and on and on. And also now we're moving higher and with fewer longs. And you can even see it here. Here you had the longs come out of it, okay? Going into the election, and the prices went higher. So here you have the same thing again, people getting spooked out of their longs and the prices moving higher. But here was the lead in for the next one was natural gas. We finally got natural gas. They finally went positive on here and prices rolling over. These people may have to get out of it. That's what I'd like to see. Is this is the greed kicking in. I'd like to have it come down in here, but as you see on some of the charts, short term, like UGAS, and that is oversold. Gas, GAZ, the one I went after, it, like I said, went funky in ratio wise, gas to natty gas. Can I do that? I can do that, right? Did I print this? No, you didn't print this. Print. Oversides tabloid. What's a Super A3? Is everything on there? I can't tell. Let's say it's on there. Print 10 pages. Print it. Buckaroo Bonsai. Save as PDF. Copper. All right, cool. So you have the, no, you don't, because I didn't do it that way. Ah, you buggers. Come on. I have to do this when I'm doing this. Volume. Volume. Did we do it that way? Southern Copper? Maybe not. Well, you get a bonus round. Stored by volume. Ugh, killing me. 2 seconds, 3 seconds, 4 seconds, 5 seconds, 6 seconds. Says drive you in. That shit insane, doesn't it, Cash? Nice. 21. No. Tabloid. See, what's the Super A3? Oh, 13 by 19 inches. That's pretty big. 12 by 17. 11 by 17. 10 pages. Print. 2. Second copy. More stuff to send. Link to the video. Okay, so I'm looking for natty gas. Natty gas divided by frickin' gas. So this tells me if the ratio ever got out of whack, in which it did. Here it is. It went outside the bands here. Okay, so this is buying natural gas, selling gas. Okay, here's a funny one for you, huh? So this is that gas, GAZ, is outperforming natural gas, basically. There's more of a decay on here, okay. But I had, is there volume on here? Ixnay, no way. Hey, that's not the one I want, right? Ooh. That'll work. Okay, so here's our reversal on here. So this is long natural gas, short gas. So I bought gas on here. So I'm actually going the other direction on here. Okay, this is all, where we have 14, 15, 16 for the March, March low here. So this was the low. Okay, now I'm thinking we're getting a reversal on here. It just, in my eyes, gas overshot. You know, you saw on an overshoot on the bands. Okay, and here's the frothiness here. Now if I switch it around, gas, natty gas. All right, so this is on the long side of it. Okay, so now what I'm hoping for is that this is a hammer low, and we get a reversal on here. Okay, but over, like I mentioned before in that video I did in January on nat gas. Okay. Oh yeah, nat gas gold. All right, this is leading into too long here. I can't do this. So this is buying nat gas and selling gold. It's not working. You guys can have a look at that one. Once again, okay, nat gas. Nat gas can actually, the October contracts, they can actually take out their contract lows, right? And then still be bullish. Okay, so this is what my greed is. So I'm looking for, because the commitment to traders, you have all those longs in there. They have to do something. They have to come in and support it. They're all standing there in the pit. You know, this is just euphemism. Or, no, they're all standing in the pit, going, "Hey, we need to support this thing. Somebody go get some more money and buy this," because if they're all long, they got to get this thing to go the other way. All right, I'll leave this at that, and then start it up with net gas and go through the other charts. Bye-bye.